Hi, this is Joe Rabil with Rabil Stock Research. So what I want to do today is combine a lesson with what I'm seeing in the sector action. I'm going to show a couple of topping patterns, or at least on a relative basis, showing weakness in some of the sectors, but I also want to show some that are rotating to the upside. The reason why I want to go through this and what I'm going to talk about in the lesson is why I'm a bottom-up investor versus a top-down. I'm going to talk about the difference between those two and why I favor looking at it from a bottom-up perspective. All right. And when we go through that, I am going to talk a little bit about volatility and what's taking place on the weekly time frame, because I think that's pretty important to discuss. Also going to go through the market and also the symbol requests that came through. So let's go ahead and get going with this lesson. Before I get going, my comments are for educational purposes only. Please do your own due diligence before making any investment decisions. All right. So what I want to do is start with the XLK. So I want to just focus in on a few things. Now, I've got all four charts up, but I do want to kind of focus in on this one chart up here. And you can see what's taking place on a relative basis for the XLK. I have been talking about this for quite some time, really been developing over the course of the last 3, 4, 5 months. Notice what's been taking place. We broke the uptrend line on a relative basis in the XLK versus the SPY. And then we went back up and tested the high. So those of you who have read my book or gone through my course know that's the 1 and the 2 and a change in trend. And we've just completed the reversal, which is a 3. All right, that's the 1, 2, 3 pattern. I'm always on the lookout for both on a price basis and a relative basis. Now, if you notice, we don't actually have that 1, 2, 3 developed on a price basis, only on a relative basis. So what does that mean to me? Typically, and I'd say as long as this stays above this 190, 200 area, this is probably going to be short-lived, but it's still fairly important to recognize what's leading right now, right? Right now, we don't really have technology as a sector leading the way. Now, there could be some individual stocks you could play inside that sector, but when I'm looking at it from a group standpoint, I think, I'm a lot more interested in looking at what's taking place on this pattern, this relative strength pattern. So I know that I'm looking for both, right? I want to look for price pattern and RS. All right. Now, I'm going to show you an XLC. Let me just show you this. Same thing kind of developing here. Notice how the relative strength is starting to leak a little bit, but we're not seeing a lot of weakness on the price chart. What that tells me, as long as we stay above this green line, which is the 18-month, this can kind of roam around. This can underperform, but we're not looking at something significant to the downside in this area. It's more of a healthy corrective process. Now, because they're in a correction in both the XLC and the XLK, that would keep me from looking to maybe place a whole lot of emphasis in those right now until they stabilize and we start to see improvement on a relative basis. So let me just show you, and this is where I want to go into the difference between what I consider to be top down versus bottom up. So if the way I look at it is a top down would be a guy who's looking at the S&P, he's looking at the NASDAQ, and then he's working his way back down through the sector charts. So I'm talking about looking at those charts, not the individual components, but looking at the individual charts, like looking at the S&P. So starting with the indices and going down to the sectors, and then maybe looking at some industry groups, and then going inside there and looking at the stocks. All right. Nothing wrong with doing it that way. I know a lot of really smart guys that go through that process, and it's not a bad approach. I'm going to explain why I do it the opposite. What I do is I take all the stocks. It's normally like 2,000 to 3,000 stocks, which comprise a lot of these sector funds, all the sector funds, and then sort them by sector. And then I want to look at the individual patterns inside those sectors. And I want to see what is moving, where the strength is coming from right now. All right. And the reason why I like to do that is, and I've been doing this for 30 years, and I know what I've seen over the years is that there's normally anywhere from a 2 to 4 week advance notice when you go from a bottom up standpoint. You start to see things earlier. And why is that? Because the leaders show up before the actual sector chart kicks in. All right. So if the sector chart might be showing some signs of improvement off of a low and maybe making a major bottom or something like that, I actually want to see what are the stocks that are actually showing really strong characteristics that are starting a move. I'm going to give you a couple examples of that when I'm done with it. But first, let's just go through. You can see the improvement in the XLP. Look at this. Look at the momentum started to kick in back April, May, something like that. But really where we're seeing the confirmation now and where I'm seeing a lot of people talk about these is we get this breakout with extension and look at the difference in the relative performance. Look at this relative performance line turning the corner for the first time in almost 2 years. All right. But look at how overbought we are right now. Right. So everyone's talking about staples, but it's not necessarily timely at this point where it becomes very obvious to everyone else. You kind of want to notice it beforehand. And the way to do that is to look at it from a bottom up standpoint. You'll see the individual patterns looking really attractive at that point. So let's look at another example of that. XLV, another breakout taking place. And well, this has pulled back already. You can see the relative strength showing improvement. Nice breakout pattern, and then followed by a pause and then another breakout from there. Now, what I think is important about bottom up in this specific sector is that it's a mixed bag. Some stocks in this group don't really look very good. They look like topping patterns. Stocks like Merck really look like they are going through a bit of a breather after being really strong. And then you've got other areas that are starting to show signs of real improvement. I have to look at the individual stocks to know why this sector is turning up and showing strength. So you got to be very careful about just throwing anything. Just because a sector is moving up doesn't mean every single stock in the sector is going up as well. All right, now look at something like XLRE. This is one where I had in my reports, I put out the what I call a bottom-up sector review, which is all the individual stocks inside the sectors that are looking attractive. And really starting back in here in July, I started to put out a lot of individual real estate REITs were showing up. They were showing up more attractive than the sector chart. All right. They were leaders in the sector, and we've seen a lot of strength since that time. We now see the relative strength. Look at how overbought they are. So look, I like the look of these, but do I really want to be doing a lot of buying in the REITs right now? Probably not. I want to look for some kind of a little pullback in this RSI 5 on the weekly. Still, the stocks in here and the strength behind this looks to me like the start of something rather than the end of something. And we can really see that when we look at the ADX pattern on the weekly chart. You see that move to the upside? All right, now look at something like XLU. This is the one that I want to give as a pretty good example. So we get this move, we get this turn. I've been talking about the improvement in the XLU really starting back in April, and we saw the downtrend line break and the 1, 2, 3 starting to emerge. But at this point, it's still pretty early in the sector chart. If you look at this chart, you're thinking it's just too early. But if you go through and start to see what stocks in there are showing signs of improvement. So I was talking to my institutional clients about this and saying, look, we've got an undercut and rally pattern, right? But I want to look at the stocks that are actually breaking out and showing strength here. So let me give you a couple examples of this that I was highlighting in my report. So you can see back in the early part of the year, this actually broke out even before April. It was making a higher low, and the relative strength was kicking in and breaking its downtrend line well before we saw any real improvement in the sector chart. And so the only way to do this is to go through a list of stocks and have them sorted by sorted by their sector, and then you can see this showing up. Look at something like SO. Also, same thing. Back in April, really started to kick in and break out. These two were way in advance of what we were seeing, and there's been a lot of really attractive patterns that have shown up since then. But just seeing those early kind of breakout patterns gives you a lot of confidence to see that something, a real improvement is starting to take place, especially when you see the leaders with big bases, huge turns, big MACD reversals on their weekly chart. So it's a reason why I do this. It's what I think my subscribers like about my reports. I'm giving them a little bit of an early warning sign about individual sectors. If If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. Okay, as I said in the opening, I do want to talk a few minutes about the volatility in the market. All right, now I've got the spider chart up. On the right, I've got a weekly. On the left, I've got a daily. And what I've done is, you can see I'm circling here the average true range, which is a 20 period, right? And then I've got an 18 MA of that average true range on this first scale right here. All right, and what we're seeing is the average true range was dropping all the way through basically right around April. We started to see a shift. We started to see a move to the upside because the moving average actually at that point started to turn up, right? And since that time, that moving average has been up. I don't like to focus too much on the line itself because there's a little bit too much noise associated with it. So we want to look for where the average true range 18 MA is turning to the upside. And back here, as this was making a new high up here, we were seeing increased volatility through that whole period. So we know we're getting into a little bit more of a dangerous period for these longer term type trades. So if I'm looking to play bigger picture patterns, stocks that I like to use like a monthly chart trend and then a weekly for entry, you got to be a lot more careful when you've got a period like this where the volatility is going to the upside. Even if price is moving higher, you're gonna have an increased likelihood of getting stopped out, and so you got to be kind of careful. Now you can see what took place on the daily chart. We had this big spike in volatility. So through this period, trying to trade off of a daily chart should have been very, very difficult. Not just because it was going down, but because you could have found stocks that were going in the opposite direction of the market potentially. But when volatility is high, it just increases the likelihood that you're going to get stopped out. Now we have seen improvement in this, but if you notice just recently, it's starting to clip up back again and starting to get a little bit closer. So any kind of increased volatility over the next couple of days is probably going to turn this back to the upside and put the risk back on, even for shorter term type trades. All right. So I wanted to point this out. You got to be a little bit more careful right now. I've been talking about this with my subscribers, something we talk about every week. Got to keep an eye on this volatility. I like this measure better than the VIX myself because it makes more sense to me. I think you can see it as a trend play. You can use it as a 1, 2, 3 reversal. Look at it in those terms, and I think it'll make sense to you. Okay, so I'm currently looking at the updated S&P. When I did the volatility, it was before the market opened. Now it is 10:30 Eastern time. And you can see that we've gotten some selling to start the day. And we're re-breaking. So one of the things I wanted to point out is I still have the monthly, the weekly, daily, but I've added in an hourly here. And then I've got my chart up on the left with the relative strength and the RSIs. But you can see that we just rebroke the 18 here after reaching the 0 line. And there's definitely some weakness. Now, I want to point out, I do a much more thorough examination of the S&P on my YouTube channel called Invest Like a Pro on Friday morning. And I go through the volatility. I look at overbought, oversold. I go through the trends on all the 4 time frames, as well as the momentum. All right. But let's take a look at the QQQ. So again, what's taking place, what it looks like to me is we had a move to the downside. In this case, we clearly broke the 18 on the weekly, all right, and formed a negative bearish pinch, right, and then we got our kind of a down bar, and then on the daily chart, we made a move to the downside, and now we're kind of checking back to the moving averages with another pinch former. So this is a 2 time frame pinch play starting to develop. And it would almost be ideal on the on the hourly chart if we got a little bit more of a consolidation or a rally here, although we're already at the zero line, we already have low ADX, so we can draw in our trend line and we can play this trend line break as a signal because this is bar number 2. So that would be a signal. Now, I tend to like it after it's consolidated a little bit more and got this a little bit close, these two lines a little bit closer, but just based on the pattern, the strength to the downside, and the fact that the MACD has worked its way up to the zero line, it does qualify as a signal. Now, I do believe, but for both the S&P and the QQQ, this prior low is key. So this 450 mark, a little bit below 450, I think if we take that out, then that really increases the odds that we're going to come down to the next support zone somewhere in the 425, 430 area. Now, we've got this rising 18-month. We're pulling back. I view this as a correction in an ongoing trend rather than the beginning of a big reversal at this point. I just think it's digesting gains that were made, after pretty substantial gains that have been made. All right, look at the IWM. Again, this is kind of ratcheting around. So here's the breakout level, and we're ratcheting around in that area, like above that line, above that 200 mark. And anything above the 200 mark is okay. But as I continue to talk about, and I know this might seem like repetitive, but we want to keep staying on top of this, because the moment this breaks out, then I think the environment really gets good for small cap. And that might not happen here. This might just drop back down, might not have the type of setup that we want. And if that's the case, then everything's on hold for now. Right? So that's why we want to watch this every week. All right, looking at AMD, first stock that came in as a request. So we've got this rising 18-month line that we've corrected to. We've got pretty good momentum. So if you look at this on the monthly, really had a pretty nice move, but we had a spike high, and we needed to come back down all the way to the 18-month in the breakout area, and we've got pretty good strength here. All right, now we've formed an ABC down. Okay, but we have overrun on the weekly chart. So anyone who's taken my course or anything like that knows this overrun means that we don't want to be in a big hurry on the move back up. So the first move to the upside isn't enough. We don't want to play the one to the upside, a break of the downtrend. We need this to form a higher low after turning the corner. We don't have a lot of strength in the sell side, so we can still keep this on our watch list and keep a close eye on it. But I think it's a little on the early side. We had some selling, and I just think it's going to take a little bit more time to get things going. All right, let's look at this BABA. Notice what's going on the monthly. It's been kind of walking it out. It had the big decline, and now it's sort of settling down and working sideways. Now, people might look at this and think this is divergence. I don't know if I would consider that the case, all right? But I do like the fact that the ADX has dropped down. We don't have a lot of strength in the sellers now. They've kind of weakened. What we need is buyers to step in, all right? We need this green line to kind of break out and get above 25. We're starting to see some improvement on the weekly. MACD getting back above the zero line, ADX getting back above 25 based on the buyers. We've got our 1, 2, 3 developing. So that's the 1. We've made a 2. We're going to need to come up through 90. I think 90 is the key level. If we get through 90, then it's kind of game on for this stock. And we want to keep an eye on that from that standpoint. All right, so Meta. So, a lot of times I look at a stock and I try and determine, is this a topping pattern or is this a pause in an ongoing uptrend? And based on everything I know, I would be looking at this as a pause in an ongoing uptrend, meaning we make a move up, you pause, and then you go again. You move up, and is this a sign of a topping pattern? I mean, it could be a topping pattern, but I think based on what's taken place here, we've made on the weekly chart, we have this kind of consolidation pattern going sideways. MACD is working off the overbought condition while price is actually holding up pretty well. And we don't see any real sign of selling. The red DI is staying below 25. So because of that, I would be more inclined to believe that this is a pause in an ongoing trend rather than a topping pattern. So that's my thesis. All right. Now, in order to prove my thesis, we're going to need to break out above these highs. But that's what I'd be thinking. I don't know that unless I'm trading down to the 450 level as a short play, you could do that and play it for a short-term trade or something like that. But if you're looking at it from a bigger picture standpoint, I don't think I'd be looking at this as a big top at this point. All right, now look at this SMCI. Now, last time I talked about this, and I had been talking about it with subscribers, was this 1,000 mark. We had to get through 1,000 to kick things off again. We went through a big up move and corrected. All right, but we needed to resurface above 1,000. Anything below 1,000, we avoid. And look at what happened. Now we broke the low end of this trading range and we're trending to the downside, and now we're actually breaking the 18-month. This is why I use multiple time frames. Looking at it from this standpoint and saying, hey, this is corrected for 5 or 6 months, why don't I just go ahead and buy? Well, you use the smaller time frame to help with the timing, and we could have looked at it on both the daily and the weekly, and we would have avoided getting in this, and we're still waiting for the next entry point. All right, so be patient. I think this is going to take a lot longer now, and it could get a lot uglier potentially, but we are coming into the next support zone before too long. Just give it a little bit of time. Now, looking at Tesla, I really think of the big names, this is the one that kind of appeals to me the most. You made the big move to the upside. You had a big drop, a lot of support at 100, made the move up to 300, and now we're consolidating, in this area with a lot of support at 150, trying to turn the corner. Yeah, we need a little bit more confirmation. I'd like to see it close back above the 40 here, but just the overall pattern I think is pretty interesting, worth watching. And I'd like to see, at a minimum, I want to see this come back up through this big red bar, this down bar. If we do that, I would consider playing it as a trading play. If I want to look at it from a longer term standpoint, I got to get back above this prior high here. Okay, let's look at TMO. So, I think this is a pretty attractive longer-term pattern, right? Look at the way the monthly is playing out. You see how this is turning at the zero line? The buyers are still in command, even though the ADX has dropped. I want to explain this. So the ADX has dropped down, but during this decline phase, the red DI couldn't get above 25, couldn't get the ADX above 25. And then look at what the MACD did. It turned right at the zero line, and we've shifted things back to the upside. Now, in the near term, again, with all the volatility that we're dealing with, here's a breakout and failure. Maybe not ready to go right this second, but if I'm looking at it from a bigger picture pattern, I would be okay with looking at this closer to 600 and then giving it a little bit more room. I think this has some pretty good upside potential. Now, I do want to look at this USO very briefly, just, this is a type of thing. So normally what I like to do at the end of these is talk about stocks that I like and look attractive. But right now, what I would tell you is what I would be avoiding right now is energy. All right. The damage that's being done over the last few weeks really started, 2 weeks ago. Is to me is not the right kind of weakness, right? We want to look to buy good weakness, not bad weakness. This is bad weakness breaking the 18. This green line is the 18-month. We're breaking that. This is not the kind of weakness you want to be stepping into. Also, notice how the RSI is clearly 20. RSI 20 is clearly below the 50 level on the weekly chart. Notice how red DI on the weekly is breaking out for the first time in a while. These are signs. Now, unless you're a trader and you just want to trade it back up into the daily 18, maybe. But other than that, I think you got to cool your jets on looking at any energy stocks. Thanks for watching the show today. If you have any stock requests you'd like me to analyze on next week's show, send them to stocktalk@stockcharts.com, or you can just put them in the comment area below. Also, my YouTube channel is called Invest Like a Pro. Have a great week, and we'll see you next time.